Hello, everyone, and welcome to It's Time to Excel. Yes, it's a different background. Yes, I'm in a different place. That's okay. We're coming to you live anyway, because sometimes life just kind of throws us a couple of curveballs. And you know what? As business owners, we just walk our way right on through them and keep moving and just rolling with whatever heads our way. So, nonetheless, I'm so glad for those that have decided to join us, whether it's live or on the replay. We're so excited to have you here because today is a fun little topic that we're going to be talking about, and one that's kind of near and dear to me here, which you guys can only guess where that's going, I'm sure. And that's because, as you know, Hammy's on his mission this year. Hammy is on his mission to increase profits because he wants to help you turn your Hamiltons into Benjamins. And he can do that with a little help from us. So that's what we're going to talk about today. Too often I've been working with some clients that their revenues are increasing. That's fabulous, especially now that things are opening up a little bit. Things are increasing, the sales are coming in, revenues are turning in, and this is absolutely fabulous, except that their bottom line isn't quite where they thought it should be. And funny thing, it really isn't. So why is that? Too often I have seen companies where they may have $500,000 in revenue and their profits maybe $10,000. I can see another company that has $100,000 in revenues and they have a $10,000 profit. How's that possible? That's what we're going to talk a little bit about today. And that's where we're going to have an opportunity to kind of get you thinking a little bit. So, what kind of strategies? What can we do? What kind of things are going to help us to scale, not just grow? Because you can grow your revenues, that's fabulous. But are you going to scale? And scale just simply means that you're going to keep things in proportion so that your profits start to increase and you start to do things a little bit more efficiently. So what kind of strategies can we do? What can we do? Let's think about it. Let's look at first what some of the reasons are why our revenues may be increasing, but our profits are not. So less money is in our pocket, but yet we're making more sales. How? So that's what we're going to take a look at today. So one of those, let's take a step back and let's go with the obvious one. What about your expenses? Do you have a system in place to know what those expenses are? If not, now's the perfect time to do it. We have got to make sure that we are tracking our numbers. You have all this revenues coming in, it's hitting your bank deposit. That is fabulous, except more is going out in expenses because guess what? When you grow, your expenses increase, whether that's in the form of additional equipment, whether maybe that's in the form of staffing or contractors, maybe it's in the form of who knows what. So very often, and it's very, very common, when you increase in your revenues, logically your expenses are going to follow. And unless you get a handle on those expenses and know exactly what they are, they can surpass your revenues very quickly, which means less money in your pocket. And that's not going to help you turn any Hamiltons into Benjamins. You're going to go back to Hamiltons again, and that is not where we're going to go. So thinking about that. So how can we do that? How do we get our hands around what those expenses are? And the only way we can do that, of course, is to track it. You have got to have some kind of a system in place to track. You got to have a tool in your tool belt that is going to help you to accomplish what it is that you need to accomplish. And that very simply is an accounting software or accounting tool that you have that you can actually get that information so that you know as your revenues are increasing and you're not just seeing it in your bank account, that you know what those expenses surrounding that are. That's one of the reasons. But let's take that one step further. Many of us offer a variety of options. So let's say you have some products out there. Let's just use that for an example. There are times when you may have this product and it costs you maybe $10 to produce it. You sell it for $20, that's a $10 profit. Well, maybe another one that you have only has a $5 profit. And depending on what the mix of those sales are, it's very probable that overall your sales can increase, but maybe one of those, their profits is decreasing. So how in the world do you know that? Oh, all these numbers getting so confusing. Doesn't have to be. Hang on for a little bit. We're going to get back into here and how we can easily start to look at that. It's a coming. So let's think about that. So sometimes that happens. What about one-time charges? My goodness, last year was a prime example of what we had. Inclement weathers, we had a pandemic, and the list goes on and on. A lot of unexpected type expenses hit, hopefully one time in some cases, sometimes maybe not so much, but those one time hits can really cripple your bottom line, especially if you haven't gotten a plan in place, my little favorite little 4-letter word that's also known as a budget, that we can actually start to put things together and have a little bit of a cushion there to kind of help with that issue. So how do we do this? What else happens? Well, let's think about this. What about increased rates? What about insurance rates increasing? Maybe you have a rental building, maybe their rates have increased. All of these things keep rolling in slowly but surely. They're going to affect your bottom line. Are you realizing it? Do you have a system in place to make sure you know what that is? What about if you missed a credit card payment or a loan payment? Funny thing, those interests add up really, really fast and come back and really affect your bottom line. So you're going to be giving away those extra Benjamins to various liabilities that are out there, different loans and credit cards, if you don't make sure that you're there. So thank you for whoever joined you. I am on my phone today, so I have no idea whether or not I can see the chat or not, but we're just going to roll with it anyway and kind of go from there. But I will definitely come back in and take a look. So thank you so much for joining us as we're going. And if you have any thoughts on here, feel free to drop it into the chat screen and I'll kind of follow up with it here in a little bit and see what's going on, because this is kind of one of those things that we really need to be thinking about. It's too easy for those expenses to get out of control. So how can we get ourselves a handle on that? We talked a little bit about having an accounting software. We definitely need that. You know, that's my big mantra that I'm always talking about, is what software is available. Of course, there's various options out there. Of course, I specialize in training for QuickBooks Online. And in fact, here's a little secret and a heads up that's coming. I am working on rolling out just a simple few-week program that is to make sure you are utilizing QuickBooks Online efficiently and effectively, so that the tool in your tool belt is actually saving you money, not costing you money. So be on the lookout for that. More information to follow. I'm looking really forward to that training that's coming through. And I'm hoping that you will be willing to join me and just kind of get out here. And let's make sure, especially if you're using QuickBooks now, let's make sure you're using it efficiently and effectively, because the object is for you to save some money with this tool and actually make it a lot easier for you to start planning. And that's the other factor, is you've got to have your reports available. You have to know how much money is coming in, how much money is going out, and what buckets is that money going out and in. Hey, Earl, great to see you. I can see them. Hallelujah, Earl. I know you have lots of information on this one, and you are such a wealth of wisdom. So I'm so glad that you decided to join us today and talking about how we can really wrap our arms around, when we're increasing our revenues, how do we wrap our arms around the expenses and actually see what's going on? This is your specialty, Earl. I know you are absolutely very versed in this one. So if you have any comments, feel free to drop them in there. I don't think I'm going to be able to type from my phone, so we're just going to work our way through this. But I really want you to start thinking about this crazy little 3-letter term that gets thrown out there that most in corporate America are pretty familiar with. But with the small business owners, it is challenging. And that is called KPI. What in the world? More acronyms, more drives us nuts, doesn't it? Welcome to the accounting world. It's okay. Let's take a step back. A KPI is simply a key performance indicator. Big fancy words to tell you, how's your business doing? Give me some type of something to work with so that I can see, how is my business going? Because we're in this for the long haul. So we need to set ourselves up for success. Me too, Earl. I just love this topic as well as we're going through. And we really need to understand that. So we're only going to focus on 2 today. There's a boatload of them and it can really get overwhelming, but let's just take a step back and let's just look at a couple of them. And that first one is our gross profit margin. So what in the world is our gross profit margin? That simply says, let's take our revenues. That's our starting point. How much revenues do we have in? And let's minus off what it took us to produce that, or the cost of goods sold. So let's take a look at that and see what our quote unquote gross profit margin is. So that tells us what? It just simply tells us this. This is how much it cost us to produce. This is how much we sold it for. What's the difference? That is our gross profit margin. And that can start telling us Are we charging enough? Are we making sure that we're covering at least our expenses and putting a little bit more on? It varies, and that gives us, and over time, you can start to see trends. And this is why it's considered a key performance indicator, because you need to see how things are going. Is it increasing? Is it decreasing? If your cost of goods and all of a sudden that number and it starts to decrease, you may learn that your cost of goods increased and you didn't even realize it because your suppliers starting at they had increased fees that you never passed on to your clients or you never figured out how to absorb, et cetera, et cetera. So this is a great way for us to figure out how are we doing, at least from the product standpoint, from their gross profit side of it. How much is it costing us to actually produce what we're selling? The other one that we want to talk about is our net profit margin. Okay, I keep talking about these profit margins. Here's the bottom line. Let's take into consideration our gross profit, or our actual profits, and let's back off not only our cost of goods, but let's take into account our expenses, those fixed expenses that are coming through, the staffing, the payrolls, all of those things that are going as part of it, we need to be taken into account and figure out what our net profit margin is. Because we really got to see, do we have a handle on our expenses? Are our expenses getting out of control? Are they already out of control and we got to put them back in line? Every industry has a different, what is a good KPI? Because I also get that question a lot. What's the best for me? It's industry specific. And a lot of it is, it's a starting point. It allows you to get what they call this ratio or this indicator so that you can start looking. And if you notice that something is going up or down, then that helps you to make better decisions. It helps you to make better business decisions for the longevity of your business. And that's what we truly, truly want to do. But we have to make time for this. We have to get these tools in place and we have to have something ready to go. And that's where, as I said, a software such as QuickBooks comes in handy. It allows you to track your information in real time. And the cool thing is, if you're a little bit bigger company, there's a really cool feature, which I'm going to share with you here now, the secret that's coming through. There is a new version of QuickBooks. Yes, it's a little bit more expensive on the monthly subscription, but it actually factors in these KPIs for you in real time. That is a cool little option. And for anybody that's ever done on the accounting side that has figured out all of these KPIs and really dug into them, they're time consuming to put together. Well, QuickBooks has made it easier for us. So that's been a pretty cool little option. So look and see what software is available. At a minimum, let's use a Google Sheet or an Excel sheet. Let's take a look at it. Let's see how are we performing. Our revenues are increasing. Absolutely. This is awesome. We're in the right thing. But do we have our arms wrapped around our expenses and our cost of goods sold? We need to make sure that we do, because it's too easy for that to get out of control. Earl, I'm sure that you would agree with that. It's really easy for folks to have that drop out of control, and it can get out of control quickly. Because let's face that, as far as small business owners are concerned, most of us take a look, we're really good at what we're doing. We're good at seeing kind of the direction that we're going. But very often, small business owners, that's where their strengths lie. They don't lie in the numbers. And it's the numbers that, if we don't get them under control, will be the thing that will completely and utterly crash and burn a business so quickly. And that explains why 82% of small business owners have failed. And they actually admitted the reason they failed was because of the inability to manage their cash flow. And that's what we don't want to have happen, because it's your time to excel. It is your time to be able to move forward and scale your business, not just grow it, but scale it so that for the long term, it is out and you are able to serve so many more people because you have your systems in place, which Earl, this is absolutely his favorite thing to be talking about, is the different systems in place that will help you be the tools in your tool belt to be able to make a successful business. So that's kind of what we want to take a look around. And there's some things to be looking into. I'm kind of checking off some notes here to make sure I've caught everything as I'm going, since usually I have this on my second screen. We had to go old school today. You'd be proud of me. I do actually write. In a lot of industries, that's very true. Thank you so much, Earl, for bringing that. The costs are spiraling out of control. COVID has had a really huge impact on that. Absolutely. Cost of lumber is out of this world. And that's the one that come into mind here. We were looking at putting a roof over our back patio. Cost of lumber right now, not so much. It like I think quadrupled, if not more. It was crazy when we looked at the numbers. And that's just one example. As Earl pointed out, there's a lot of industries, and that particular, the costs are just out of control. Things are just nuts right now. And that is going to affect your bottom line as well. So you've got to be factoring that in, or you've got to be accounting for it and figuring out how can you cut costs in other ways? How can you, maybe a way that some folks can do if you already have staff, maybe you can contract out some additional items instead of adding more staff, maybe you can do a subcontractor. You can save a little, sometimes depending on what the situation is, that might be something to look into. It kind of varies depending on your industry, it varies depending on where you're at. And if you're just starting out as a small business owner, you definitely have some support. But what support is that? Let's make sure you have the right support in place, get the right tools in place, get the right direction going, and build that solid foundation. And part of that foundation has to be your finances. It has to be getting control of that revenue coming in, those expenses going out, and not just tracking them, but understanding them. And that's the key. And that's where reports are just so vital. You've got to have your profit and loss. You've got to know what you're doing. That's great. But beyond that, you really need to take that profit and loss and dive a little deeper. If you want to be able to scale and you want longevity in your business, and Earl, I'm sure you would agree with this because I know you've done many of these, you need to be really looking at the key performance indicators we haven't talked about too. And all they are simply numbers to help you make better decisions and let you know when things are changing and allowing you the opportunity to change and adjust to meet those increased costs from many industries that are out of control. Increase this, increase that. It allows you to be able to wrap your arms around that and make good decisions. And that's kind of where we're at. So it's just helping you to reflect more accurately where you're going and the direction that you want to go. So that's what I really want to encourage you today is to, if you want to excel and you want to make sure you're going where you need to go and you're ready to do that, let's get our arms around not only the increasing of revenues, but get our arms around all the costs associated with those revenues and make sure we are starting to understand exactly what those costs are so that we can figure out, are there areas to streamline? 9 times out of 10, of course, there's always ways to streamline, but you need time to do it. So here's what I'm going to encourage. Make sure you take time to work on your business. Take time, especially at the end of the month. You want to be looking at those numbers. You want to be looking at those revenues, expenses, those profit losses, and several of these key performance indicators. And you want to compare it to the prior couple of months. See how things are going, what's going on. The more data you have, the more decisions you can make based upon data, not emotion. You don't have to pick up your bank account on your phone and say, oh, shoot, it was 10,000 yesterday. It's 5. I have no idea where my money went. That's not a good strategy. Just trust me. Just roll with it. Trust me. That is not a good strategy. Looking at your bank account is not the way to manage your business. And yet so many small business owners do it because that's what they have time to do. And that's what we don't want to be the case for you guys because we want you to excel. We want you to absolutely be set up and on a solid foundation to grow your business the way it needs to go. And Earl, I know that you are here, so you're going to have to come join me one of these days here real soon. And we're going to have to talk a little bit more, maybe even on this subject or around some different options there that we can go. And if for those of you that are listening or coming back in, make sure you check out BizBytes. That's over on the Money Mountain Systems. That's Earl's thing, that he gets such a wealth of wisdom. And I encourage you to check it out and have that opportunity just to kind of share because we both have a heart that we really want to see people succeed, especially small business owners, because it's challenging out there. So let's surround yourself with the folks and the support that you need to make your business. And Earl's going to join us. Awesome, sir. We will get that scheduled. Absolutely. And I would love to have you join us because we just have to make sure he's off because he's probably on the 12 o'clock shift. His come over at 12 o'clock on Money Mountain Systems. Check it on out and see what awesome BizBytes that you can learn from there as well. So thank you guys so much. I'm going to keep this one fairly well short because, as you said, I'm kind of in the middle of a couple other things, but that's quite all right because we just learn to adapt. And I think that's one of the keys as well. Small business owners, you just need to be resilient and adaptable and work with what you've got. And you know what? It all works out. So, Earl, I want to thank you so much for joining us. I want to keep everybody up and running. Be on the lookout for the QuickBooks Online training that is coming up. It is going to be a beta program and it's going to be an incredible deal. And I want to make sure you guys, anyone that is really interested in making sure they are using QuickBooks Online to its fullest potential so that they can actually save money, you can keep talking to me, and I look forward to talking with each and every one of you very, very soon. Reach out in the meantime if you have any questions, and don't forget to return back here at 11:30 next week when we continue It's Time to Excel. Have a great day, everybody. Take care. Thanks, Sarah, for joining me, and we will be in touch. Bye-bye.